top of the pile at all, is it, Mike? Mike, thanks for that. Mike mentioned the difficulties this morning. First Republic's down about 31%. Kelly Lyons is going to join us a little bit later, going into the opening pound to build on some of that. Maria, 11 minutes away. In fact, it's only about 9 minutes away now for an ECB rate decision. We thought this was easy. It was 50, and then maybe they commit to another 50. Maria, what's in store now?
Jonathan, just how much the narrative has changed. Remember, up until a week ago, this was a central bank that was an automatic pilot. You were going to hike 50 basis points. Everyone was focused on the guidance when it comes. That decision, and then it comes down to the communication.
You'll hear from President.
Hitting a sort of systemic global bank, then yes, the answer is it's a serious case. Now, of course, we've had action from the central bank overnight, so some calm has returned to markets. But of course, back to the point of seek and destroy, this is the sort of environment where you're shaking confidence in investors, and so we don't have the full picture, and we also understand that there's probably problems elsewhere within the banking system.
Jay, with that in mind, for a lot of people, it feels like the world has changed. The world has changed and our views should change. Have your views changed?
Well, John, I think not essentially, no. To me, I think we need to expect authorities to be able to both walk and chew gum at the same time. So we've had the Fed come out with their bank term funding program. JP Morgan suggests it could provide up to $2 trillion of liquidity. Overnight, we had the Swiss National Bank announce that they would provide up to $50 billion in capital and liquidity to Credit Suisse, which is equal to 6% of GDP for Switzerland. So the authorities have thrown a big blanket over the issues. I do not think the issues are systemic. Credit Suisse has been the sick man of European banking for years. SVP is the big winner from the zero interest rate policy, and that has reversed and they've been taken out. So it's not in any way, in my view, systemic. And so I think the authorities have thrown the blanket over the fire. They've put it out, essentially. And now we're going to go ahead and raise rates to deal with the inflation issue. I continue to think we'll see 50 basis points here in 10 minutes or so and 25 basis points next week from the Fed.
You're not alone. Citi sees the same thing. 50 in about 5 minutes, 25 next week. Alessio, do you think it's a mistake to try and isolate the banking issues of the last week from any monetary policy decision?
Well, I would say from a perspective of a central bank, let's define what that mistake is. I agree with Jay that the situation has not changed from a structural or systemic standpoint. Let's talk about the cyclical downturn, though. What is the issue with waiting how the dust settles for 1 or 2 months? The ECB, just like any other central bank, they're targeting lagging indicators. Actual inflation or the actual unemployment rate, those are two unquestionably lagging indicators of the cycle. Inflation expectations are at 2%. So from that standpoint, there is no sense of urgency. Now, I think raising 50, raising 25 is the right thing to do, was the right thing to do up until last week. But what is the issue with waiting today, how the situation is settling from a credit transmission standpoint, from a credit spread standpoint? One possible path here would be to do nothing or just do 25 and quantify how much this market turmoil and tightening in credit conditions is actually equivalent to an interest rate hike, and then reassess a month from now, 2 months from now. I don't see a big problem from that if they handle the communication in a very clever way.
They'll be criticized for whatever they do today. There is no great decision. There is no easy decision. Ella, something we talked about all through this morning, all this week. What would spook you more, if they hiked 50 or if they didn't hike at all?
Well, the suspicion is if they do 50, then clearly it's another mistake of the type we saw back in 08 and 2011, and we know what happened back then. And then so the markets would probably take a cue from that. I suspect maybe if they do nothing might cause some panic, and that is because, what do they know that we don't know? So that type of analogy. Yeah, so absolutely. I mean, they're doomed if they do, doomed if they don't. And let's see the communication. But, you have failures and successes in the communication from Lagarde. So I'm not 100% confident. She has become better at communicating with markets, nothing like Draghi used to be. But there are certainly risks both around the decision and the communication channel.
Jay, it's always slightly different. There's never a perfect parallel. There is a fear, though. We've talked so much about Chairman Powell being Burns or Volcker. Does Lagarde face a Trichet moment right now?
I don't really think so, John. Again, I mean, European banks are very well capitalized. Credit Suisse is a tiny, I know it's systemically important, one of the 30 global institutions, but from a perspective of markets more broadly, it's a very small perspective or point of view. It's less than 1% of the European Bank Index, for example. So I don't see this, I really don't see this as being as critical a moment as people think. The European equity market's still well above its 200-day moving average, up 4% year to date. The S&P holding up well above important technical levels after all the bad news that we've had. So to me, I think this is not as critical an issue as it's being made out to be.
Well, Alessio, your views have changed. The last time you and I spoke, you were pretty constructive on markets. From what I see in your notes so far, you're not anymore.
Correct. In early March, we moved from a growth and cyclical standpoint, unrelated to the events that we're talking about today. We have moved into a more defensive positioning. We assessed that the rally that we saw between December and February across all risk assets in relative and absolute terms was a little too fast and too far, reflecting the optimism on inflation, which then started walking back. So we moved to a defensive positioning for other reasons. The developments of the last 3-4 days have only been a fortuitous catalyst for that price action to play out more quickly. But we believe we are back into a mode of growth deceleration, of growth expectations decelerating, and more policy tighter policy for longer is probably the answer at this stage. We need to see what this repricing is doing. I think this repricing is bringing down business and consumer confidence and is tightening credit conditions. So we remain defensive for now, and that's why we think monetary policy should also take a pause and assess the transmission mechanism into the real economy that is coming from this financial shock.
We can't pause, that's for sure. We're 1 minute away from that ECB decision. Alessio, Ella, Jay, they're going to stick with us as we work through it. Going into that decision, this is what we're looking for, a 50 basis point move. It feels like the world has changed in the last week. Let's see if that call changes in about 30 seconds. Equity futures going into the opening bell, negative, not by much, by a third of 1% on the S&P. In the Treasury market, the stage set as follows: 2s, 10s, 30s, 2-year unchanged, 3.88, anything but unchanged in the last week, from north of 5 to south of 4. Looking at the European bond market, let's take a flavour of things for you. Italy, Germany, yields pretty well behaved going into this one, at least this morning. And finally, euro dollar. This is how we're set up going into this ECB call. Euro dollar just south of 106, 105.96, positive 0.2%. That ECB decision, Mike McKee, is out.
50 basis points it is. The ECB still focused on inflation. The deposit rate goes up to 3% from 2.5%. The main refinancing rate is also raised by 50 basis points. They see inflation at 5.3% for 2023. That's a dramatic drop from 6.8, which was what their forecast was the last time they made it. They are going to, they say, continue to apply flexibility in the PEP purchases, which is no surprise. Here's a number on inflation in 2024, falling all the way to 2.9%. They are projecting that it will remain too high for too long, which brings you to that 50 basis point move. Now the question is, what do they say about the future? Because at this point, they had come out last time in February and said we were going to raise 50 basis points today, so they did. But do they say that they're going to do that again? They had projected that they would go more data dependent, and we're waiting to see if that's exactly the way they end up today.
They say they're monitoring current market tensions closely. We'd expect a headline like that. Mike, they think that inflation is going to be too high for too long. This is the projections, though, Mike. I just wonder, what are these projections worth in a moment like this one? And we're going to replay this act next week with the Federal Reserve as well.
Well, I'm looking through the statement now, and they do note that, and this is a quote, the elevated level of uncertainty reinforces the importance of a data-dependent approach to the Governing Council's policy rate decisions. And they say they're going to determine it based on their assessment of the inflation outlook. They do have that one pillar where the Fed has two, but the ECB moving now to where the Fed is and saying that we're going to be data-dependent. We're going to look at what's happening with the inflation numbers, and we, as I noted, are seeing them lower their inflation forecast to 5.8% for 2023, but suggesting that's still too high.
Mike, that line there that's just popped out. The ECB's ready to respond on price stability, on financial stability. Mike McKee, right now, are those two things in conflict?
They shouldn't be. That's the thing about the way central banking has developed over the last 20 years or so. It started with Ben Bernanke, the idea of separation of powers, where you would use supervisory and regulatory rules to deal with the financial stability world, and monetary policy to deal only with, in the Fed's case, inflation and jobs, in the ECB's case, only inflation. The question is, do you get some sort of market disturbance that is so bad that they have to bring monetary policy into it, as they did, all the central banks did in March of 2020 with the pandemic, and they did following the collapse of Lehman Brothers. But if you have just an ordinary sort of problem with one bank or a couple of isolated banks, it probably doesn't make a difference. They will perhaps bail out a bank if necessary. The Swiss did, the U.S. did, but it doesn't suggest that the ECB is going to make any kind of massive monetary policy change. 50
basis points from the ECB, just about 106 on euro dollar outside of ECB HQ, just 25 minutes away from this news conference. Maria Tadeo. Maria, your reaction to this one?
Well, this is a European Central Bank that has decided to stick to the script and obviously stay with the 50 basis points. And, you know, we're talking about this the entire morning. This was a tug of war between the data, which obviously points to inflation mission not accomplished, to bring it back to target, or actually focus on the volatility and the now in the moment. And it is the data that seems to have won this argument. Now, a number of things that I really want to focus on in this press conference is what kind of consensus did they get to reach this decision? Just how unanimous was it? Then secondly, there's another line here that says the European Central Bank has a toolkit that's equipped to provide liquidity support if needed. It'll be interesting to see what would deploy that. And then secondly, overall, just as message from Christine Lagarde, you know, what is the rationale to make a move like this? And then can she really provide and shore up confidence for investors after this move, which herself she had calibrated very well a month ago and said would only be derailed in extreme scenarios. So it seems for the time being, clearly they do not see spillover from Credit Suisse as extreme enough to prompt a U-turn.
Hey, Maria, thanks for that. 50 basis points from the ECB and absolutely no guidance whatsoever as to what we might get next. Back with us, Alessio, Ella, Jay. I want to give you each the opportunity to respond to what you've heard in the last 5 minutes. Ella, first to you.
Well, not a surprise on the 50, given that's what they've been guiding and pre-committed before this meeting. Whether it's the right thing to do, we'll see. As we were saying earlier, this might be third time unlucky for them, probably the wrong time, and markets were already discounting that this is likely to be the peak in rates. What do you do with it? I would actually say you buy duration here. So you buy rates, you buy duration further out in the curve potentially. We've been moving more in shorter maturities in the US. But the reason you do that is because banks are really about confidence, and we do have a bit of a crisis of confidence at the moment. So that's number one. Number two, you do lack a European-wide deposit guarantee. I mean, this is something that we dealt with back in the Eurozone crisis. And so it might be a little bit more tricky to shore up Europe in the same way as you might have done in the US. So I don't think this is over, and potentially this hike today might have made things potentially worse despite this liquidity option that's being put on the table.
Jay Pawlowski, your take.
Yeah, the thing that I wanted to see, John, was their forecast changes, and I saw across the tape there, they lowered, as Mike said, their inflation expectations for this year and next, and they raised their GDP forecast for this year. And I think that's really the critical issue. If this is not systemic, we have slowed, if not stopped, the interest rate hiking cycle, particularly from the Fed. I think less so from the ECB. After next week, I think the Fed goes on hold. And therefore, that's really the key issue. To me, the most important thing here is that the battle for 2% inflation in the U.S. and probably in Europe has been fought and lost. In other words, we can't take inflation right down to 2% because we're going to break the economy. And I think that's really the key point. So if you're a medium to long-term investor, I think the opportunity set here is to look for opportunities, be a buyer rather than a seller, particularly in areas of strength. And there are many areas of strength still within the global equity markets, even after the past week. In fact, all the weakness has demonstrated where the pockets of strength are.
The problem is where we thought strength was, it looks like weakness now, particularly the banking sector. Alessio, your take, please.
Yeah, my take is that this is probably the last hike. I'll be very interested in hearing more of the communication today. I think it can be justified with ample liquidity tools made available to banks. So you separate the question between the growth and inflation outlook from the plumbing of the financial system. From an asset allocation standpoint, I think this reiterates an environment where I agree, longer duration exposure, underweight credit, and still a solid perspective on equities, but with a defensive bias away from cyclical. So I think this is an environment where credit is the asset class that stands out to have the least upside potential and still some meaningful growth sensitivity, which you don't necessarily want here. Quality bias and defensive sectors in equity as a way to stay engaged in the equity market, but with a defensive tilt.
We'll keep this conversation going on your market calls. Though, Alessio, for a lot of people just tuning in, and if you are, welcome to the programme. 50 basis points from the ECB, as expected for much of the last month since the last meeting, but of course the last week raised some questions about whether they would deliver. They have. Alessio, can you read anything into what the Fed might do next week based on what Lagarde has just done right now?
25 basis points, probably my base case for the Fed, depending on how we get there.
Do you agree, Ella?
It's possible. I mean, central banks found this new religion, but I think that ship has sailed. You know, the market dynamics are now ahead of that. And the only thing that stops this route is the central bank policy put, unfortunately, which, given the context of inflation that we have, could potentially be good for assets down the road. I agree with Jay on that point. But at this juncture, the pressure needs to come first. And so we would be much more cautious here until markets can stabilize.
What about you, Jay? Not the market call, just the Fed call for next week. Is there something to take away from the ECB and apply it to the thinking of this Federal Reserve next week?
Yeah, I mean, to me, it's 25 basis points and then they go on hold. I don't expect them to cut rates like the market is pricing in because we don't expect a recession. I would just note, you know, Morgan Stanley raised their Q1 GDP forecast yesterday to 2%. Goldman put a circle around what the effect of SVP is likely to be on growth in the U.S. at Q4 took their Q4 number down 0.3%. So when you have the big scary monster out there and no one really knows what's going on, it can be anything. And now we're getting our hands around the likely impact of this. And to me, it's no longer as scary. I'll take.
Good morning, everybody. Welcome to Trading Capital's daily live stream of the market open. So we have a lot to discuss this morning already. The ECB raised rates, kind of shocking the market a little bit. 50 basis point hike. This is under the duress and stress in the overall European financial system with Credit Suisse. So markets didn't like that. You can see the S&P rolled over. What this entails is that the Fed is going to have to continue raising as well, which is what we have been discussing and saying. Look at this DXY popping. The US 2-year yield is still misplaced. So again, the bond market in the States is still showing a Fed severely cutting rates. Now there are a couple levels. I'm looking at XOM for a trade. XOM for a day trade. It is falling sharply. The level that I like on XOM is right around 98.36 is a big level. 98.36. Okay, we'll go long. It's a starter position. 98.36 if it flushes in there. So keep XOM on the radar. Even if we let that pierce, and then another additional level is 97.65. So we got two good support levels in and around here. That should bode well for the XOM trade. So I'm just going to keep that one on the radar. Obviously oil is down because of this hike. The dollar's popping still. Spiders are down. We have 4 minutes till the open. You are seeing some strength in some of the tech names. They are holding up relatively better, but they have softened a little bit here as we move in here to the market. We are seeing Apple slightly down. Gold is popping. And then we're also going to be looking at a short on gold. Gold is looking to continue to move higher, but the GLD around 181.68, I would consider a short there. So keep XOM on the radar. We can potentially do this as a day trade. The dollar has softened a little bit here. Bitcoin's under a little bit of pressure. Google, Tesla's catching mounts. So that's the first one I'm really watching. XOM, keep that on the radar. Looking for a near flush. I'm going to do a 1/5 position. So take your portfolio, whatever you're wanting to put in the trade, and divide it by 5. So that's what I'm doing. But really, it's pretty quiet as of now. We'll see how the markets open. You're seeing the regional banks open lower again, probably due to the weakness of Credit Suisse, First Republic, etc., etc. Alright, so the markets are set to open here in about 6 seconds. Keep it on the radar. XOM's flushing. We are open. It is flushing down here. So keep that 98.36 on the radar. Spiders are gapping lower. Will we get a move to the upside? We certainly could. But it's all going to be dependent on the dollar. XOM's bouncing. Oil's still falling sharply. Let's take a look at the spiders here. Spiders have gapped down tremendously. Those are two big gaps on the chart, which makes me think we could actually rally to the upside if this market gets any sort of momentum. It would kind of catch people off guard if we were. XOM still not on the level. I'm watching it on my other screens, so just keep that on the radar. We are seeing it come a little lower now. First Republic's down 30, Apple's negative, Credit Suisse is up, go figure. Bank of America's down 1%. Hack W. Apple's under a little bit of pressure. There is a level on UAL. UAL is dropping 41.50, 41.56. I do like that. XOM still just off of our level. So we are watching a couple names. Nothing's hit our levels yet. We just be patient, sitting in the pocket of this trading. Apple's coming down more now. Nvidia's under pressure. XOM still under pressure. KRE's coming lower now. The KRE ETF is coming lower. Markets are catching a small bounce. AMD's down. Schwab is down. Ford's down a couple percent. Good exit on our rig trade. Natural gas is still holding up, but it is slightly negative. XOM's coming down, so keep that on the radar. Here comes XOM. So definitely be ready for XOM. Google's coming down, rigs coming down, coins pulled off the highs substantially. Apple's still coming down. Tesla's catching a little bit of a bounce. The S&P's catching a bounce. Okay, XOM's approaching our first level. This is a big level here. I'm just going to keep that on the radar. I'm watching many other things. IWM's at the lows. Banks are under some initial pressure. So are the healthcare stocks. But they are trying to bounce. Microsoft's down off the highs. Gold GLD is still down. Take a look at VLO. That's also coming down. Spiders are still just holding, trying to get a small bounce off the lows here on the S&P. But they're trying to hold this support on the spiders. GLD's pushing up. AT&T remains weak. Meta's getting a boost as well. Meta is up on the session nicely. So XOM's still in play here. We're still just waiting patiently. I'm still seeing some of the banks getting slaughtered. The dollar's trying to push up. The yields are falling though. Long end yields are falling. Bitcoin's almost trying to go negative. XOM's catching a bounce, so that level's pretty much off the table now, unfortunately. Let's go back to the drawing board. Let's see these bank stocks and see if we can isolate any levels. I'm gonna take an FRC trade here. This is super high risk. Understand that we could wake up and it could go bankrupt. I'm taking an FRC trade here. I just got filled at 2020. Super, super risky. Super risky. I'm warning you guys now. I'm keeping a tight stop loss on this one. Small position. I'm doing a 1/8 of a position. FRC 2020. Very small position on a day trade because I understand the risks are immense. Yes, I do. But we're long FRC. Out of the money. Spiders are catching a bounce. Nat Gas is catching a bounce. The Russell's catching a bounce. No bounce yet on the KRE. But maybe soon. Look at this. Alright, we're coming up in the money here. So I'm long First Republic here, FRC. I'm warning you though, it's super, super high risk. But this one could snap back if the markets get a pop, which I think they're likely going to get. Microsoft's still under pressure. Nvidia. The KRE is catching a small little bounce here along with the IWM. So that's going to help this trade. Look at this. Here we go. Still super weak though. Very, very weak. So Meta's had a huge push. Rig, that rig stock is huge dump on rig. Wow. Wow. Oil's back to the lows. Rig has seen a big dump. Spiders are still under pressure. Alright, we're in this money a little bit here. We'll see if we can get a push up. I think we can. Spiders are still trying to bounce. The Dixie's trying to bounce. KRE's trying to bounce. We're still seeing some potential market strength in here. But they are down right now, as of now. We did see our Baidu trade gap down, but that's rallied significantly off the lows. Our Baidu trade, and I'm warning you, this FRC is just a pretty much a speculative play. We've done so well this last, you know what, I'm prepared to just make a little bit of a run here. Look at this. Look at this pop on FRC. Come on. Come on. Come on. Push up a little bit more. A little bit more. Meta is also a potential short trade. Meta is a potential short trade. Keep Meta on the radar. I like the 20150 level on Meta for a short. Look at this FRC. We're in the money nicely here. We're in the money nicely. Just keep your order tight. Keep your order very, very tight. I want to see a little bit more. I think the spiders are trying to push up a little bit more. KRE's getting a nice bounce. Russell's catching a nice bounce. Look at this. Look at this push. What a push. We're already... Look at this. Look at this, guys. Get ready. Alright, I'm exiting FRC here. Did not happen yet. It just got halted, FRC. It just got halted. Too big of a move. But we are up on the trade. We are in the driver's seat right now, but it did got halted because of the volatility. Which actually means it could probably gap up. So now I'm going to encourage you to protect the trade. We're in the money like 6% on a day trade already. Pretty sure it got halted. I can't get filled. I can't exit right now. Might be news. FRC is halted, but the markets are trying to push up still, so that bodes well. Bodes well for our trade. Right now, we're in the driver's seat as of now. It just got halted because it had too big of a move too quickly. Basically, it broke that range. You know, it had almost a 9% rally in the blink of like a minute. So we're already up on the trade nicely. I have a limit order already out at 21, stop loss protection at 21, so I'm banking profits no matter what happens here. But look at that move. I mean, we could get a gap up and it could fill us. The spiders are still trying to push up. SPY is still trying to push. FRC. And this thing could have a big, big move up. The KRE has had a nice bounce off of the lows. Look at this rig. Look at that rig. We sold at the highs pre-market and it's gapped down all the way pretty much back down there. Let's do a quick spider check. KRC. Sorry, FRC. The dollar's softening substantially, so that's going to help the markets. So far, just the one trade right now on FRC, long at 2020, long at 2020. Markets are starting to see some sell side pressure though now. But this is still halted. We'll see if it's halted on news. It's just halted because of volatility. It's not an announcement. It's just halted because of volatility. Imagine this gapped up on a buyout news. Because right now, it's showing in my account I'm up 54% on this trade. If it were to be up 54%, I mean, we're talking about a gap up all the way back to there. Now, I think that's just a glitch. But imagine that. Holy shit, that would be a huge win for us. Nonetheless, I don't expect it to do that. I don't expect it to do that. And again, one of the reasons it's a small trade is because of the halt, the news, the crazy news. Markets are starting to come back down now. Bitcoin seeing some pressure. We will see what happens though. It is halted. For now, we're stuck in that trade. That's okay. It's a small position. I knew it was high risk and we're still in the money right now as of now, but maybe it gets taken over, maybe it gets taken under. I'm sure we'll find out in a few minutes. Spiders are still trying to push up. I'm watching FRC on my other screen. I am watching FRC on my other screen. Meta's still on the radar for a potential short. Hasn't hit the level yet. FRC, I just executed. FRC's back open. Boom, what a fill. 2150. Huge gain for us. Huge gain. Look at that. I got covered at 2150. Wonderful gain. Boom. Just like that. Look at that. All right. Huge win. Huge win. 6 point. What is that? Look at this thing push. 6.3% day trade. I'm out. That's good enough for me. That's all in a day's work. That's all in a day's work. All right. Now we can just chill. Look at this thing go. If you're still in it, wonderful job. I took my profits. Too risky for me. It could push up more, but again, that's okay. I'm taking my profits and running because the KRE is coming right back down. Right back down. That was super risky. That one gave me a little stress, I'm not going to lie, but that's why we went super small. I identified the risks, but we came out unscathed. Unscathed. Let's take a look at XOM again. That's bounced before our level. I think oil's getting a bounce. Take a look at oil getting a bounce. Spiders are still trying to push up. The Russell's trying to push up as well. That First Republic is still up. I mean, up off the lows, I should say. Bitcoin's trying to catch a bid. Nat gas is pushing up. That's good to see for our UNG trade. It looks like these markets are probably going to try to go positive today. I would not be surprised if they do. I would not be surprised at all. Baidu's had a massive bounce. I probably should have covered that one pre-market, but you know, you don't win them all. China stocks are under pressure. Meta's still pulling off the highs. Tesla's under a little bit of pressure right now. But just one winner in the book for us. It was a big win too. Basically, the ECB is going to be talking right now, Christine Lagarde, so we'll tune you into Bloomberg. Give my voice a little bit of a break here.
I don't think they can offer us any guidance on rates whatsoever. They did offer us some projections, and I'm not sure what they're worth either. So 50 basis points from the ECB. The market looks a little like something like this going into the news conference. Euro dollar 105.92, positive about 0.1%. Looking at the bond market over in Germany, we've seen a real repricing at the front end of the yield curve. Yields are higher going into this one by about 3 or 4 basis points on a German 2-year 2.41. So what's next from this European Central Bank? Facing down tensions in the banking system, can they isolate those tensions and focus on elevated inflation and really focus on getting rates up and CPI down against the backdrop of real tension in the financial sector? And is this a template for what we can expect from the Fed next week? Here's the ECB President, Christine Lagarde, kicking off this news conference after a 50 basis point hike in the face of tension worldwide and going into Chair Powell next week at the Federal Reserve. What a difficult moment to be a policymaker, and as we said repeatedly, truly stuck between a rock and a hard place.
So good afternoon. The Vice President and I welcome you to our press conference. Inflation is projected to remain too high for too long. Therefore, the Governing Council today decided to increase the 3 key ECB interest rates by 50 basis points, in line with our determination to ensure the timely return of inflation to our 2% medium-term target. The elevated level of uncertainty reinforces the importance of a data-dependent approach to our policy rate decisions, which will be determined by our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are monitoring current market tensions closely and stand ready to respond as necessary to preserve price stability and financial stability in the euro area. The euro area banking sector is resilient with strong capital and liquidity positions. In any case, our policy toolkit is fully equipped to provide liquidity support to the euro area financial system if needed, and to preserve the smooth transmission of monetary policy. The new ECB staff macroeconomic projections were finalized in early March, before the recent emergence of financial market tensions. As such, these tensions imply additional uncertainty around the baseline assessments of inflation and growth. Prior to these latest developments, the baseline path for headline inflation had already been revised down, mainly owing to a smaller contribution from energy prices than previously expected. ECB staff now sees inflation averaging 5.3% in 23, 2.9% in 24, and 2.1% in 25. At the same time, underlying price pressures remain strong. Inflation, excluding energy and food, continued to increase in February, and ECB staff expects it to average 4.6% in 23, which is higher than foreseen in the December projections. Subsequently, it is projected to come down to 2.5% in 24 and 2.2% in 25, as the upward pressures from past supply shocks and the reopening of the economy fade out, and as tighter monetary policy increasingly dampens demand. The baseline projections for growth in 23 have been revised up to an average of 1% as a result of both the decline in energy prices and the economy's greater resilience to the challenging international environment. ECB staff then expect growth to pick up further to 1.6% in both 24 and 25, underpinned by a robust labour market, improving confidence, and a recovery in real incomes. At the same time, the pickup in growth in 24 and 25 is weaker than projected in December, owing to the tightening of monetary policy. The decisions taken today are set out in a press release that is available on our website. I will now outline in more details how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Turning to the economic activity first. The euro area economy stagnated in the fourth quarter of 22, thus avoiding the previously expected contraction. However, private domestic demand fell sharply. High inflation, prevailing uncertainties, and tighter financing conditions dented private consumption and investment, which fell by 0.9% and 3.6% respectively. Under the baseline, the economy looks set to recover over the coming quarters. Industrial production should pick up as supply conditions improve further, confidence continues to recover, and firms work off large order backlogs. Rising wages and falling energy prices will partly offset the loss of purchasing power that many households are experiencing as a result of high inflation. This, in turn, will support consumer spending. Moreover, the labour market remains strong, despite the weakening of economic activity. Employment grew by 0.3% in the fourth quarter of 22, and the unemployment rate stayed at its historical low of 6.6% in January 23. Government measures to shield the economy from the impact of high energy prices should be temporary, targeted, and tailored to preserving incentives to consume less energy. As energy prices fall and risks around the energy supply recede, it is important to start rolling back these measures promptly and in a concerted manner. Measures falling short of these principles are likely to drive up medium-term inflation pressures, which would call for a stronger monetary policy response. Moreover, in line with the EU's economic governance framework, and as stated in the European Commission's guidance of March 8, 23, fiscal policies should be oriented towards making our economy more productive and gradually bringing down high public debt. Policies to enhance the euro area's supply capacity, especially in the energy sector, can help reduce price pressures in the medium term. To that end, governments should swiftly implement their investment and structural reform plans under the Next Generation EU programme. The reform of the EU's economic governance framework should be concluded rapidly. Let's look at inflation. Inflation edged down to 8.5% in February. The decline resulted from a renewed sharp drop in energy prices. By contrast, food price inflation increased further to 15%, with the past surge in the cost of energy and of other inputs for food production still feeding through to consumer prices.
All right, so the spiders are still under pressure, still negative. They're trying to bounce back and go positive. A couple sectors I'm watching. Healthcare is under pressure, so that's the second largest sector. With healthcare under pressure today, the XLV is actually down 0.76. It's going to be difficult for this market to go positive unless tech does the heavy lifting. So that's kind of what I'm watching here as of now, but some of the banks are still trying to bounce off the lows. Still under a little bit of pressure on the Russell. I mean, it is still negative on the session, but it is bouncing, which is why the S&P is trying to move up. JPM is pushing up. KBE, KRE is pushing up. Bank of America has gone green now. Bank of America has gone green. So interesting to watch there. You're seeing Apple trying to push up. Tesla's getting a nice little push to the upside. There is a short level on Tesla, but it is higher. It is higher. Going to be a lot of people waiting at that 183.23 level, but it's a little bit higher than that. Basically, the short level that I have on Tesla would be let me just manage some positions here. Even for solar's catching a bounce. Coin is still bouncing. AR is still bouncing. So Tesla, if Tesla was to go into a Pierce of 185, we could look for a short trade. Other than that, I'm going to just hold steady, remain a little bit more defensive in nature. We've already closed one, so I am comfortable holding that winner in my pocket and not letting these markets go against me. Coin is still under pressure, but GDX is under pressure. I find that intriguing, even though gold is up. But gold has definitely pulled off the highs and looking to go negative, which could be a little indication that maybe, just maybe, we're going to see the dollar go positive. But the dollar right now is under pressure. Dollar is under pressure. Nvidia is pushing up. Tesla is getting a nice surge. Tesla is getting a nice surge to the upside. Bitcoin's trying to push up as well. Markets are trying to push up. JPM is having a big boost. Baidu's had an epic rally from the lows. Should have probably covered my short down there, but the pattern is still okay. It's still potentially negative where we're seeing oil still under pressure. Nat gas is still trying to hang on to some positive gains. It's up about 2% on the session. Walmart's under pressure. Costco's trying to bounce. KRE, Banks, Russell, they're all bouncing. Oil's putting in maybe a little bottoming tail. The Russell's still trying to push to the positive side here, but it's still currently down. Big banks are trying to catch a bid still, but under pressure. Healthcare is still exceptionally weak right now. Healthcare is the lagger as of now. So it's good for our Regeneron short and our Vertex pharmaceutical short, but not good for our CVS long. But we'll see if they catch a bid. Gold is seeing a sharp decline, which makes me think maybe the dollar is going to go positive and put pressure on this market. And sure enough, look at the dollar as we speak. It's trying to push up. It's still negative, but it is trying to push up. And I'm looking at gold. It's really rare to see this correlation where gold's still positive on the session. So we'll have to monitor that. Spiders look like they want to push for this gap fill. We'll see if they get there. Nvidia is pushing up. Meta's pulled off of the highs despite the market rallying. The Dow is trying to push up. Home builders have had a bounce. And really, as of now, we're not in any trades. No stress. No stress is the nice aspect. Considering we already have a big winner in our pocket, over 6% on that F. Let's just do a quick check on that FRC where it's trading. That was an over 6% on that day trade. I mean, some people try to make 6% in 1 year. We just made it in 30 seconds. Or not 30 seconds, about 10 minutes. Industrials are trying to push up, go green. What else are we seeing here? Healthcare is still under pressure. Microsoft has pulled off of the highs. That's still negative. Gold's trying to push back up again. Apple's pushing up. Apple's on watch for this little bit of a potential breakout. It's got a lot of work to do though. Spiders are pushing up here. Spiders are pushing up. Some of the real estate is still weak. So if you look at XLRE, that is still down. So some of our trades like ARE, this chart is just looking horrific. I mean, it's so oversold and it can barely get a bounce, although it's retracing back down here. Let's take a look at what else we're looking at here. Kimco, KIM, RF, we're still shorting RF here. That trades nicely in the money. Let's take a look at KIM. Whew, look at this KIM coming down as well. That's certainly good to see. Let's take a look at Snapchat. There may be a short level. No, that's a little bit too tricky. Intel's having a big pop. What is this PCT? I've never heard of them. What are they? Pure Cycle Technologies. Don't know what that is. Schwab, go figure, even after that insider buy, still under immense pressure. Let's look at Citi. This Citi is, something's brewing in Citi. Something is brewing in Citi. I mean, as long as these bank stocks are remaining exceptionally weak, so there's some underlying. And look at the KRE. It's trying to come back down to the lows here. The KRE is trying to come back down to the lows. A lot of people are trying to bottom fish here. The Dixie is pushing back up. Dixie's still in bullish alignment. Let me remove some of these trend lines. So the Dixie's still hanging on to some bullish trend right now, but it is pulling off the highs. Bitcoin seeing some near-term distribution. Coin is coming down. Look at this KRE or ARE. We also saw the manufacturing data drop off a cliff today. So that followed up. And then go figure, policymakers are still tightening aggressively. I find that fascinating. Super fascinating. WTI is still under pressure. KRE is at the lows, or not at the lows yet, but almost. Almost. Natural gas is still pushing up. Nvidia is now positive on the session. One thing that concerns me about this market price action today, still the banks. Still the banks. Look at this. I mean, you could try to bottom pick Citi here, but I'm going to stay away for now. Wells Fargo. Let's take a look at JPM. Bank of America. Mr. Warren Buffett's play. It's still negative. Let's take a look at UBS. Credit Suisse. That's up. Spiders are still under pressure here. Another round of selling. KRE is looking like it wants to take out the lows, and that's not positive. Oof. Something still is lurking in this banking sector. That is not a healthy price action. We could actually go along the KRE if it flushes some more. I'm not going long yet. I find it interesting that Meta was one of the powerhouse stocks opening up, and now it's pulled off the high substantially, which is showing that communications, XLC, has now gone negative, under pressure. Even if you look at like T, this one's definitely one of our top short plays. We're deep in the money on that specific trade. Tesla's now coming down. Markets are coming in. Is there a bank blow up? KRE just made a new low. Look at this. Look at this. What is going on here? What is going on? Ooh, I know what's going on. Look what's going on. The Dixie. The Dixie's going on. Watch out for that dollar. It'll get you. Take a look at XOM. Everything is dumping now. Alright, so XOM is still on the radar now for a trade, but it has to hit our second level. I will only take it at the second level. So I'm going to keep that on the radar. XOM. Let's keep an eye on the spiders and the KRE. Since we have Bitcoin and Apple on the screen, Apple's pretty much a spider in Q trade, so we can watch Apple. I'll keep the KRE here for the financials. And actually, the Russell's also going to be a good indicator. But definitely KRE is under pressure today, down 3.5% yet again. And this is the thing. People are saying, oh, the banks are so oversold, so oversold, so oversold. Generational buying opportunity. Oil's trying to make new lows. Nat gas is still remaining strong, so go figure. We're long nat gas as of yesterday, the trade signal. So boom, boom, boom. We're already in the money nicely on our UNG trade. Now, again, I'm not getting cocky with UNG. We're up about 4.5% on that trade. But it is options expiration. KRE's still coming down. I'm still watching XOM. KRE's made a new low. Will the Russell make a new low? If the Russell makes a new low, that is trouble for this market. Trouble. I'm warning you. Excuse me. So just the one trade in the books for us, and I'm just fine sitting comfortably. No risk right now. Really no risk. Our ARE is dumping out, so something is still lurking in this particular real estate REIT. Look at this sell-off. Just craziness. And that's great for our short. I mean, something's lurking. Something is lurking. We'll see if we get more continued downside. Spiders. Nvidia's still remaining strong, so that's probably the Qs are up on the session. Almost, oh, the Qs just went positive. So Qs are definitely where the relative strength is. And again, I think the selling has been insulated. I keep harping on that. But the selling has been really insulated. The Dixie's getting some buy signals. That's not going to be good for the Russell and the markets. Let's keep an eye on those banks. Banks are trying to bounce. KRE, AR is dumping. Bank of America is under pressure as well. Kimco is under pressure. XOM still coming down. Keep XOM on the radar. Oil is dumping, so we may have a play there. We may have a play. Oil looks like it wants to take out the lows. Oil's still fighting that weekly 200. And then there is a level that we could play on oil as well. I'm just isolating it down here. It's around 65.20, 65.20, but I'd prefer to play XOM. Nice dump on the spiders. They're catching a small little micro bounce here. One of our staff members said that Christine Lagarde and Powell should get married. It would be a force to be reckoned with. Christine Lagarde's Powell's wife, work wife. If you're into the mature frosted Goldilocks, silver locks, not my preference. Let's do an Nvidia check. Semis are actually acting well. So again, one of the most expensive stocks continuing to surge to the upside. Let's take a look at the SMH. I know Intel is up. Those are a couple trades we closed earlier for some wins. Look at that surge on Intel. Actually, Intel's interesting here. Wow. We may have a short trade on Intel. Alright guys, keep Intel on the radar. Look at this surge. I do like Intel for a short. You're into some decent resistance here. And if the spiders break down, alright, let me just isolate down this level here. INTC. Definitely keep Intel on the radar, guys. I like this level that it's approaching, 29.95. 29.95. We can short Intel. Intel's approaching. Dixie's dumping. So the markets are finding some reprieve, and XOM's actually coming back down here. So XOM's coming to our level. Intel's also coming to a level. We have, I believe we do have some energy data coming out as well. We'll have to watch our UNG trade for that aspect. Alright, XOM's flushing, guys, so keep that on the radar. Also keep Intel. The levels could simultaneously hit. Spiders are trying to catch a bid. I do like the 90, basically a 98 Pierce. Aggressive traders can play XOM at 98. I might wait till 97.65. Intel's still pushing up. Gold's trying to push up. Healthcare's under pressure still. Oil's under pressure. Oil's at the lows. Nat gas is up nicely on the session. Nat gas is up 1.26. We do have natural gas inventories. Basically, the market is forecasting a drawdown of minus 62 billion. So if it comes in higher than that, the drawdown, then we will see nat gas likely pop. But again, we can really just wait for the market reaction. Let's look at Intel again. Intel's still pushing up, 29.95. Let me do a quick bank check again. Banks are under pressure. Wow, IWM, KRE, KBE, the big banks. So we actually may have a trade on the KBE as well. And what I'm noticing is that you're seeing a huge amount of capital rotate out of the banking sector and into tech. People are thinking tech is more safer than the banks, but in reality, who funds the big tech projects? That's the big question you got to ask yourself. Who funds those projects? XOM's still coming down. Intel's still coming up. So we do have two potential trade opportunities. XOM's probably going to hit first. Oil's still coming down. It's at 66.15, catching a little bit of support. XOM still coming down. Markets are still trying to hold this level here. You're still technically putting in some bullish consolidation on the S&P. Almost tempted to take XOM here, but no, let's be patient. Oil's still weak. Oil is still weak. Russell's at the lows. Russell just took out the lows. That's super negative for this market. Okay, here comes XOM. It's hitting our first level, but I'm not taking that. That was our first level because initially it had a bounce, so I'd want it to go lower. Let this thing fall. IWM's under pressure. Oil just made it in brief new low. It's at 66 bucks. 66 bucks. Russell new low. Spiders are still holding up. Let's take a look at the XLE. That's coming down. Let's take a look at Valero. That's also down. Let's take a look at Devon Energy. How about MRO? Alright, so XOM's really the mega cap that's under the most amount of pressure right now. And oil's just pierced the 66. It's flushing. You can also play long oil at 65.20. 65.20 is a big support level. I prefer to just play XOM. I know there's a huge bullish energy community that will likely defend these. Ooh, oil's dumping. Oil's dumping. Oil is dumping. Here we go. So I'm going to play XOM here soon. If it keeps flushing, the markets are trending lower right now. But they're still technically in bullish consolidation, the S&P 500. Coinbase has now gone negative and it's dumping hard. So Coinbase was up in the pre-market the most and now it's dumping. Home builders are under immense pressure. Coinbase is still falling. XOM's at 98.30. In terms of the level on USO, I was watching the US oil chart. And you know what? I prefer the US oil chart. I'm not going to trade the actual oil commodity itself. I'd rather just watch US oil and trade XOM. Come on. We need one more flush on XOM here. And then we can go long. I think I may play that 98 Pierce, but I'll call it out. I'll let you know. Russell at the lows. Oil's catching a bounce. Oil is catching a bounce. Have your order ready. Have your order ready. I do like the 98 level as well. Now that we're just holding here, I am seeing a little bit of accumulation occurring. Let's do a little volume check. Alright, so this is hitting a big level on XOM. This is hitting the weekly, what is it, the 50? Yeah, the weekly 50 MA. The weekly 50 MA is being hit on XOM, which is why you're seeing it defended there. But I want it to pierce. I think with the dollar pushing, oil under pressure, and the spiders under some near term, I think we can get a pierce to 98. Coin has had a huge dump. That's great for our short. Look at that dump. Nice. And we banked huge on that trade yesterday, over 4%. XOM still under pressure. Let's do a quick WTI check. Look at WTI, also under pressure, down 3.4%. Spiders, all right, keep XOM. It's coming down a little bit more now. I'm looking at that 98 Pierce level. Gold is pushing up as the dollar's pushing up. All right, 98.15, here we go, get ready. I'm doing a 1/5 position. I'm going to be a little bit more aggressive since we've banked huge. XOM's a mega cap, blue chip. I'm not worried about this when it has fallen already 3.4%. But we're starting to see a rotation out of energy now, big time. Big rotation out of energy. Coinbase is still falling. First Solar's under pressure. Natural gas is still up. UNG's up nicely on the session, 1.85%. So that's good to see. We're about 17 cents away from an entry. IWM's at the lows. Let's take a look at these banks. JP Morgan's new lows, the Russell, KRE, KBE. Lots of weakness in this market. 98.05 on XOM here. Get ready. Get ready. Oh, what are they doing to us? Look at that. It's still valid. It's still valid, but we don't want to see this bounce. No. No. That's Options X algorithms right there for you. I'm telling you. What is that? How can they do that to us? Literally. Are they listening? It's still valid within this 5-minute candle. We could see it flush and turn red again, this candle, but I want to say, all right, here it comes, here it comes. I'm going to let it pierce 98 now because it had a small bounce, which means that there was buyers there and they just got sucked out. Spiders are catching a bounce. Come on, flush a little bit. One more flush. One more. Ah. It's still valid though. 4 minutes on this candle. It's still valid. It's still valid. Tech is still pushing up. Tech is still pushing up. Natural gas is seeing a little bit of distribution. XOM is bouncing. No. No. That's okay. That happens sometimes. It just means that our level, once again, we were about a few pennies, like literally 5 pennies too conservative. But it just shows you that at least we're in a good technical range. There are buyers coming in there. The level's still good. The level is still good. Oil is catching a bounce. Spiders are at 387.10 bouncing. Ah, come on. Don't do that to us. Come on. What are you doing here? Apple just turned green. Amazon's up 1. Meta's negative, and that was up. PACW's down 22%. That's another bank. Alright, oil's catching another little sell side program, so we could see XOM. It's still valid in this candle. We really want to see this candle turn red in the next 2 minutes and 44 seconds. The dollar's pushing up, so that may help us. We need a little bit of help from these markets. Yes, we do. Snapchat's still green. AMD is a powerhouse. Holy. Jeez. Holy cannoli. Look at that move on AMD. I do have a short level on AMD, actually, if it were to push up. Let me pull it up on my other screen while we monitor XOM. Because XOM, we've been waiting. I don't want to miss this trade if it flushes. I'm going to do some quick little work on my other screen here for AMD. Because that's just been a beast. Jesus. XOM, keep that on the radar. AMD is actually coming into a nice little level here. The level I have on AMD. Coins catching bound. XOM still valid, guys. Still valid. A 95 Pierce on XOM, we can short that. 95 Pierce. And I'm going long on XOM, just so we're clear. I'm going long on XOM. Here it comes, guys. Here it comes. Here it comes. Come on. One more. Come on. We're like 3 pennies away from our level. I'm watching AMD push up. We're about $1 away on that trade. You can scratch Intel off the radar because that one had a pullback. Oh, come on, XOM. We got a minute and 14. The level's still valid, but we need to see it hit now. We don't want to see it hovering along this level. No, we certainly don't. Seems like the spiders still want to push up. But AMD is a powerhouse stock. Come on, XOM. We got 45 seconds on this level. Keep your level ready. Spiders coming down, so we may see it. Oil's still bouncing. The dollar's trying to push up. So it should flush this level. The fact that the bounce has been so muted on XOM, we're going to see a quick little flush. That's my technical perspective. Whenever you have a little micro bounce and it hasn't really moved past or higher than the previous inside bar, that's showing that there could be just waiting to suck more long people in, thinking the level's going to hold, and then typically they flush it through. With the dollar moving up, oil's still holding up relatively well. AMD is still valid. Tesla just went negative. Tesla just went negative. All right. Oh, Jesus, you saw that went crazy. All right, now let that 98 pierce level before we take a long. Let that pierce that level. For solar's under pressure, AMD. Tech is doing the heavy lifting. Oil's caught a nice bounce. That's why this is bouncing. Oil has caught a nice, terrific bounce. KRE is still at the low. KBE is still at the lows. Here comes XOM. Let it pierce that level now. Let it pierce that level. Dollar's moving up. The Dixie is moving up. We have nat gas inventories in 5 minutes. That could either also hurt XOM. JP Morgan's caught a nice bounce. Spiders are bouncing. Dollar's pushing up though. So dollar's still pushing up. Be careful about that dollar. Oil's coming back down. Here comes XOM. It's looking very weak right now, XOM. There's a lot of big funds, I think, unloading energy. Realizing the economy is falling off a cliff. Copper, oil are not signaling strength in this economy. The dollar's still trying to push up. Again, now that we've consolidated above this 98 level, it's probably a wise thing to do is to let it pierce that level by at least 5 to 10 cents. But the markets are now bouncing. Russell's had a huge bounce. Nat gas is coming in. The dollar's still trying to push up. So as long as that dollar is pushing up, I still remain optimistic that we could see a flush in the markets, a flush in oil, and a flush in XOM. But it is trying to pop. It's really weird how the spiders are upticking as the Dixie is upticking as well. Look at that move on the Dixie. It's trying to go green. If we see the Dixie go green, that's going to hurt these markets. But so far, XOM's bouncing. That's unfortunate. That's truly unfortunate. The Dixie's almost to the positive side, so we could see oil come under some near-term pressure here. AMD's pushing up. Feels like the algorithms are really tightened up lately. Just the last couple days with options X around the corner. I think that's what we're seeing here. But XOM has had a nice bounce off the lows. That trade is now pretty much off of the table. Unfortunately, that's off the table. Let's move along. No sense in sticking with a trade that's not going to play out. 95 short on AMD. That's the next level. Looking maybe Tesla for a long. Maybe. It's a little bit risky, but perhaps. But I like this AMD short the most. Home builders are still under pressure. The ITB's gone negative now, so that's a little interesting, I find. Coinbase is still under pressure. Bitcoin's trying to pop. Spiders are moving up. What else can we trade here? Let's see. It's now 10:38. Honestly, like considering the volatility has been sucked out, I am going to basically call the stream to an end. We did close one phenomenal winner on FRC. So congrats if you took that trade with us, because we were in at the low here. We were out almost at the high. And well done, well done. 6% on a day trade is absolutely phenomenal. On that note, I'm going to bid you farewell, and we'll see you on the next stream tomorrow. Take care, everybody.